internships here in a short amount of time, whether it be days or weeks. And soon you're going to be faced with the question when you get back to school of, well, what do I really want to do? How do I want to choose for a career? And there's a lot of what's that I'll talk about in a second, but I want to kind of focus a little bit on the why you want to choose a career in the financial markets, and why I think it's a great time and there's great opportunities for people sitting out in the audience here for careers in financial markets. So anecdotally, if I think about what's going on at our firm or what's going on at any of your different internship programs this summer, a couple things have probably happened that are pretty common. First thing is you're the products of coast-to-coast recruiting efforts. So near nonstop efforts by firms to bring the best talent not only to the city but to the firms that you're representing here today. You were brought in, you were probably crammed with information. You learned a lot about markets that you never heard about, products that you'd never heard about, technology that you'd never heard about. Maybe it stays all in your head at night, maybe it all falls out when you go to sleep and you come in and you relearn it the next day. But there's been a lot of information thrown at you. Along the way, you probably had a lot of fun too, but ultimately you're going to get back and you need to determine what it's going to be for your career path. And there's a couple reasons why I think that this is the time to be getting into our business. The first thing I talk about is really the opportunities that are prevented from what I'll refer to as like the intersection of humans and technology. So as you've all realized maybe in your short time through your internships, for the most part, this industry, and when I'm talking about this industry, I'm talking about proprietary trading firms, exchanges, some of the other service providers that support the business. So the industry at large, we're really function more as applied science or applied technology companies, right? Like we're not whatever you had a vision of a trading desk 10 or 15 years ago or heard about in a movie or saw in a magazine article. It's really not the case. We're very focused on solving problems. In fact, we become firms of just being problem solvers. And whether your problems are needing to manage 9 million messages per second on the open of a market, or your problems could be managing a global network with microwaves for 24-hour trading, or you could be managing market fragmentation around 14 different options exchanges or over 50 different stock trading venues. These are serious problems that evolution in the market has brought to firms to bear, and we're really looking at solving those problems using technology and technology-enabled solutions to help make that possible. It's really the only way that can be done. And that creates a lot of opportunity for folks. Think about the people that attracts the business. To go back to the problem-solving metaphor, think of your own careers. Think of your own time at school. If you're the person that's somewhat competitive within a team framework, or you're the person that if the teacher puts that problem on the board and you gather your group together, you're not only working through that group to try to get to that solution quick enough, maybe your head's going over your shoulder trying to see how the other groups are doing and whether you're going to get there faster. Like those are the people that not only are successful in our business these days, those are the people that we're looking to attract to the business. And that creates a tremendous amount of opportunity for people. When you think about what we're trying to do each and every day, regardless of role, so whether you're in a pure technology role or whether you're in a business role, whether you're in a trading role, whether you're in a sales role, it's really amazing what you can get involved with and the teamwork and the camaraderie that happens within individual firms that help build up your skill sets. And I draw a distinction in that in terms of the type of people that we're attracting and the type of, let's say, problems that we're solving. I draw a distinction to maybe what some of the popular perceptions are around the startup community, for instance. The businesses that you're working at right now and the businesses here in this industry, in this city, far from being startups, are really being, we're real businesses. And the work that you're doing to solve the problems of the day in the financial markets are impacting profitability near instantaneously. And that's an incredible opportunity for people young in their careers like yourselves that people that will have. So I think that it's important to realize that rather than shooting for something far that might happen, You have the ability to feel energized and be able to get your hands on technology and tools and be with around people that are innovating in fast cycles and have that experience happen very early on in your career to gain that experience. The next thing I talk about that I would say they're a great opportunity for in the business is what I'd refer to as both the supply and the demand for risk management. If you think about a little bit of a history lesson, if you think about markets, New York has always been what I considered the capital formation capital of the world. You think IPOs, you think hedge funds, you think big investments, you think Wall Street. New York is really where you go to raise your money. I'd contrast that with Chicago. Chicago I really view as the risk management capital of the world. And that culture of risk management and the community that's formed around that through the historical evolution of the trading floors, so home of the Board of Trade, home of the CME, later the CBOE. Really the first, on those exchanges were the first places where listed derivatives were traded. This is where the world comes to hedge their risk. And we may not trade in the same ways that we would have traded in years past, where there's floor trading and thousands of people yelling and screaming at each other, but that same culture of risk management is what permeated the entire industry. Today, those people have moved off the floors and started firms and are using technology to manage that risk. So there's this big capacity and ability to manage risk. There's product innovation through the exchanges here in Chicago. And there's a whole world of support, whether it's support from exchanges and their education efforts. There's support through organizations like John and this program here today around getting the word out around the business. There's supports from the local universities. Let's look no further than IIT and their commitment to the business. You're really coming into a center for derivatives trading. You're coming into a center for risk management. And in many ways, to go back to that startup theme, this is the Silicon Valley of options trading or of futures trading or of risk management. A big wealth of resources here in the community to support the business. Now, if you flip over on the demand for risk management, I'd make 2 points. Number one, if you look at all the studies, the investment management community, whether it be pension funds, endowments, university endowments, charities, individual high net worth investors, to a man and woman, the statistics show that they are all not using derivatives and not using the very products that Chicago is famous for to hedge their portfolios. And it's a big effort of outreach amongst a lot of different people in the business to help get them and bring them towards using the products. So the potential for more money coming off the sidelines and using the products that are really born and bred here is great. And it's a large effort that's ongoing. And it's one I think the people here should want to be a part of. The second piece, and it's kind of related to the first, is I don't know if anybody's noticed, but for the last 7 years, we've had 0 interest rates. The stock market's gone basically straight up. And we've been in an almost historic 25-year period of low volatility. In many facets over the last 6 years, memories have gotten very short and people have forgotten about the need to hedge their risk. And while I can't sit here and make predictions as to when that's going to change, what everyone learns about markets is we know the cyclicality of markets. And there's going to come a time when the world is going to need to hedge their books and their risk. And the place they're going to look to do it because of the history and the innovation is going to be in the derivatives markets here in Chicago. And that is going to be a big boost to the industry and to the people that work in it. So I talked about the community that we're building in. I've talked about some of the opportunities around people hooking up with technology and being able to innovate. The last thing I'll talk about is a little bit more about how I think the industry views that pace of innovation. Everybody always remembers sitting in the elevator talking about the good old days, right? When are the good old days? Hamburgers used to be worth a nickel. Beers used to be 15 cents. This particular trade used to net money, insert whatever strategy used to mean that money was free falling from the sky. You always feel like, geez, I got into the business at the wrong time. I'm always hearing about the good old days, how it used to be before. Well, what I've seen consistently over the years is the attitude in this business has been that these are the good old days. So despite what you read in the newspaper, what you might see some short-term concerns, which are real concerns around the flash crash or around some regulatory overhang in the business or around firms having technological problems that are causing losses, while that might be real, the work that's being done today is really what's going to drive the business going forward. And if you think about it, when I started in the business, trades usually got executed. If you got a fill within 7 minutes, that was a pretty good fill. That was pretty fast. Today, you'd probably be complaining if you got your fill in 7 microseconds. So I don't know if zero time fill is even possible, but I do know it's hard to predict what the future will be. And I know that in 10 or 15 years, people are going to be looking back at this time now and saying, hey, those are the good old days. And those firms that did well, they had it easy. But it's really because what they're doing right now. And so without being able to predict the future of the financial markets is really being made amongst all the firms represented here today in the city. And the people here are really helping lay the groundwork for that. And I'd close by saying I would like each and every one of the people in the audience to be one of those people that's helping to shape that future, because I really do think I want to see you back here next year working full-time, trying to solve some of these problems that we have going forward. So with that, I'll thank you again, and see my time is done.